Happy lunch hour, gang. Okay, it is Wednesday afternoon, and today, in a couple hours from noon, when I'm releasing this video, we will get Jerome Powell's federal rate cut decision, right? And I know people think, oh, it doesn't apply to me or whatever. Yeah, trust me, and I'm going to tell you exactly why it does. There's like a 95% chance that Powell's going to cut interest rates by 25 basis points, a quarter of a percent today. Okay. Which that should eventually trickle down and make mortgage rates a little cheaper, car loans a little cheaper, et cetera, et cetera, et cetera. On the flip side, of course, as you guys know, that'll also make the interest that's paid on your CDs, on your savings accounts, whatever, a little bit cheaper too. So you're not going to get paid as much. So again, this depends on which side of the fence. Are you a borrower or a saver, right? Hopefully most people watching on this channel are savers. But that's not what we have to concern ourselves with. The bigger issue is that we're going to see the end, we shall see the end of the posturing by the Fed from quantitative tightening to quantitative easing. If you wonder what that means the money machine about to go brrr. They're going to start printing cash again. Okay. It's going to go back to like we were before COVID. Let's start kicking out the cash machine. What's this going to do? Further devalue the dollar and further increase inflation. I want you to think about that for a second, okay? The price of goods are inevitably going to go up, whether it's food, whether it's stuff you buy at Walmart, whether it's gasoline, whatever. All right. Why? Well, let's take a look at this. So far this year, we have lost, not counting the government employees in this shutdown we have right now, companies have laid off roughly 1 million workers this year. That's 56% more than last year, and the highest it's been since COVID. Okay? You can blame it for whatever you want. You can say, oh, it's the advent of AI. No, basically what it is the companies can't make any money. And this is, again, because of policy decisions. Companies are closing stores. We can't afford to pay $20 minimum wage. We can't afford the exorbitant rents that are being charged to have our storefront. We can't afford the electricity costs that have gone up 20 or 30% in the last couple of years. There's no profit margin left. So what you're going to wind up happening, and this is where you need to take action, is there's going to be less places to buy stuff. There's going to be higher prices, and your money is going to be worth less. And trust me when I say this, companies aren't going to go, gee, let's give you a pay raise. Because the companies are like this. They're going, we got no profit margins left. They're getting eaten alive. And this is the problem. This is why Powell has been too late for so long in doing something. Because now you've got, like I said, roughly 1 million people plus another 1 million or so government employees that are not making any money. So guess what they're doing? They're collecting unemployment, which means that money's coming out of the coffers that the government has. We've got food stamps, again, we'll go into this for a second, that in September, we were paying out twice as much money in food stamps, get this, that we were at the beginning of COVID. Okay? People never went back to work. They just decided, hey, I'm going to stay on the dole. We're getting more and more and more and more to the point of people just going, it's not worth going to work. And when we have that, That drives the GDP down. That drives the value of the dollar down. And inevitably, that makes the cost of everything go up. This is what y'all talk about hyperinflation being able to come into play. All right? If nobody's working, everybody's competing for the same amount of product, what do you have? Laws of supply and demand. You're going to get hyperinflation. This, you see over and over and over again every day. The stock market's at new highs. The stock market's at new highs. And everybody goes, oh, how great this is. It's smoke and mirrors. I hate to tell you this. That's all borrowed money that's in there. That's all printed money that's in there. That's all leveraged money that's in there. You go back, we're starting to look at the same type of scenario, albeit the same result, albeit different reasons to happen, that happened in the 1920s. People were borrowing like crazy because it was the only way that now that they can afford to live, because they can't live within their means. We need that new $1,400 phone that just came out because the one I had last year is already outdated, right? Okay. But you go back to 1929 and people were borrowing money to put in the stock market. Take a look at what you're seeing now. I've got 10 times leverage. I've got 40 times leverage. I've got 100 times leverage. And when it sells off, the people get tanked. The companies get tanked. Remember what happened a couple of years ago with the banks and the loans that they made versus treasuries. Now you see all these banks that are getting into, oh, we've got to go buy Dogecoin or Bitcoin or whatever it is, all these altcoins. We've got to buy XRP. If that crashes, so do the banks. So does the government. So does everything. What do you see this morning going on? Gold and silver going up. Why? Because people are hedging again against what could possibly happen. The stock market is up. Why? Because people are gambling on what's going to happen. They're playing both sides of it, and there's no problem with that. You need to be diversified. I'm not going to argue with that whatsoever because nobody knows which way everything's going to go. So you want to, in the last week, you didn't want to have all your money in gold and silver because you got your ass handed to you. But in the last 6 months, you didn't want to have all your money in Bitcoin because you haven't made anything, right? Okay, so you take a look. A little bit of everything is a good thing. But right now, the little bit of everything that's more and more and more important is having a little bit more food until you're the next person that gets laid off, or until you walk into the store and that can of beans that was 50 cents and then was $1 and is now $1.50. I know many of you have the same stories I do. You go into your pantry and you look at the price on some of these things that have labels on them and you go, holy crap, this is what we were paying for this last year. Now you look at what you're paying now. Imagine this, the scenario that we're getting into, you're going to look at the prices that you're paying now as high as they are a year from now and go, boy, would I give back for the days of $8 ground beef again. That's what you can expect at 2 o'clock. Pinball out.